Good evening, everybody. Mike Vacchi, Princetontrader.com, here with a Wednesday night market webcast. Okay, so we talked this morning about how the Bears really had an opportunity to make a little more of the move that began yesterday up at 28.46 into the close, and they were able to convert the 50-day, but it really didn't do. You didn't have an outside day, and you didn't make a lower low on a daily basis. Yesterday it is 27.52 half. Here, well, I guess we did 51 quarter. All right, so a marginal lower low, and they have taken it down now. They've done 50 half. My thoughts are this, and I'll say I'm short. I laid out earlier on the blog and on the website the anatomy of our trade that we took last night in Globex, and I'll underscore a couple of the points that I was trying to make in that little blurb in a minute. We spent most of our day-to-day short. We did have one decent long from 64 up to test the highs. We're currently short in the 77, 78 area, and we've taken some profits, and at the 20 handle mark. They're trying to bounce it back a little bit. We'll see if there's any more that comes from this. But in looking at the hourly chart, you see the hourly mid-band, the 27.82 and change. The Bears did a good job today of holding that line. And maintaining that area as resistance. It wasn't a full-on nasty fall out of bed trend down day, but they were able to keep 2,800 converted. 2820 had been big for us. 2,800, we were able to keep them both converted. And if they continue to control these little bounces, and right now you've got one that's gone basically from 52, 53 up to 68. If the Bears can continue to push those moves back down and finish those moves with lower lows, then it will become pretty necessary to go down and test the Monday low down in the 27.11 or 27.17 area. And then if you break that, then you're looking at weekly pivot. If the Bulls are going to get their feet back, it all starts with getting over the top of the hourly mid-band tonight up at 27.82. If they can convert that and hold it as support, then they can take another look at 2,800 to 2,820. 28.46, though, as it stands now, and you got jobless claims tomorrow and you've got other things going on, but as it stands now, that's looking decent. It's looking better than it did 24 hours ago as a potential interim high. So let's take a quick look at the 5-minute. And you can see, let me back out just a hair. Price did a better job in Globex of respecting the proprietary moving average and VWAP. The Bulls had a chance here. They had held the 55 area really nicely, made a higher low, higher high, and then it just slipped out of their hands there. And the Bears had what they have not had over the past few days, which is a really strong close. So we've hopped up over VWAP. We're up over the proprietary moving average now. So the next hour for the Bulls and the Bears is going to be pretty important. I think if they can't hold it here, then it becomes pretty slippery up to 82. And whether that's just a retest of of the 78 breakdown area. Maybe it is, but it's going to have to hold. And the Bears are going to have a good night. They've given it up from 21.74 to 28.46. So they're not entitled to days off. They're not entitled to letting up. This is the first day where they've looked halfway decent. They need to follow through. And if they can do that, then they can unwind some of this that's happening. But based upon how heavy the economic news was today, the Bulls didn't do half bad. Okay, finally, I got a couple requests after I sent the blog post out to kind of talk about it if I was going to do an evening webcast tonight. So here's the 5-minute chart that I posted this morning, and this is Globex last night, but it talks about a pretty important aspect of e-mini trading that I don't think enough people that are even experienced in it can really accept. And that's the fact that the mini loves to push up against key areas, run people out of positions, exhaust them, and then bring a move back exactly where the move wanted to go all along. And the number where they were playing this game last night was at 28.35. So we saw some lower highs at the end of the day yesterday at 28.46. That was enough for us to identify short against 38. I never try to. I don't pick tops. I don't have the strength. I really don't. But I will wait for a couple of lower highs and then I'll short it against those, because that for me over time is a much better defined area of risk. So short against 38, enters in the 35 to 38 area, and you can see the yellow line there. VWAP was started to act as resistance, started to behave pretty well. Then you started to see 35 acting as resistance. So we put the short out. It made us get back in here. So we're short here. Comes down, does 5-10 handles, comes back, probes back up into this 35 area. Makes you get right back in. Because what you don't want to be doing in any kind of trading is just sitting around throwing trades on and letting stuff that's very green round trip you. No round trips. Take some profit or get your risk out, get to even stop, pay your commission, but don't let something green go red. So it comes back to our 35, hangs out at 35 quarter for about 3 or 4 minutes, which in e-mini trading is a lifetime. Lets you get back in at 35, comes back, and then, looks pretty good. Comes back and plays around here 34.75 on multiple occasions. Now, what we've seen and what we continue to see in some way, shape, or form just about every day is it will come back, say, to 35 again and hit that area, stop folks out. What if you weren't short 35? What if you were short 34? It's going to test your patience here. Test your patience. Run it down, come back one more time, say hello, and then go. So when you kind of have that in your mind, okay, then you can at least understand what's probably happening. And one of the reasons we use risk markers, we have 5-handle hard disaster stops on everything that we trade. But as far as our risk goes, it's a marker, it's a level. And it's a level that needs to get converted, either from resistance into support or support into resistance. So in this case, this 35 would have had to become support. They never wanted to trade over it. So for that continues to be a short with a 38 risk marker again and again and again and again until the tape does what it wants to do. And that served us very well over the years. And it's something, if you trade this stuff all the time, there's a little webinar on that. Take a look at it. See if you see it in your trading. Understand that just because the market probes an area, it doesn't mean that area is going to convert. Okay? Especially not in the mini. So that was my 2 cents on the trade last night. So it's just a matter of identifying the lower highs, identifying the key area, being patient, being vigilant. And sometimes the best thing that you can be is asleep. I was asleep. 1:30 in the morning. I'm short 35. It's coming to 34.75. There's nothing for me to freak out about because I'm asleep. So that was perfect. Can't make any mistakes when you're asleep. All you can do is either get stopped out or not. So we had to stop at even. We had taken 10 handles worth of profits on 2/3, and either it was going to go well or it wasn't. And we woke up to better than what we thought, and it went down and it went down again. But take a look at that with your trading, and if you want to learn more about it, come on in and we'll show you how it works all the time. All right, take care, everybody. Be safe, be healthy, have a good night, and we'll catch everybody in the morning for the market webcast. Trade 'em well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.